Hey everyone, Praj has declared its Q4 result and it has been a disappointing one. Company's revenue was down 16% and net profit tanked 57% year on year. In fact, Praj has struggled in entire FY25 with revenue falling 6.8% and net profit falling 22%. As a result, its share price has tanked nearly 50% from the peak. Obviously, it has created multiple doubts for shareholders. Is it time to sell Praj shares? But at the same time, Praj management has given ambitious guidance of 10,000 crore revenue by FY30. Mind you, its FY25 revenue is around 3,200 crore. So that would be 3 times growth guidance in the next 5 years. In that case, is this correction an opportunity to accumulate it? Or just hold the share until you get more clarity? That's where in this video, I'll help you understand the reason behind weak performance in FY25 and more importantly, Praj growth plan for next few years along with key risk in the growth thesis. And then we'll look at the valuation to conclude what Praj investors should do with the shares. But before we begin, let me clarify my videos are meant to share knowledge about companies I personally find interesting or see potential in. But that does not mean I'm recommending a buy. I'm not the owner of these companies. And if management failed to deliver, that's beyond my control. That's why I always say, please do your research before investing your money. Unfortunately, many people still invest just by watching a video or listening to a tip from a friend or family member without fully understanding the business. And when the stock underperforms, they look for someone to blame. I understand it's human nature, but in the world of investing, accountability is everything. If you rely on tips, it's very hard to build conviction or stay invested when things get tough. If your goal is to create long-term wealth from stock market, 3 things are crucial. First is patience, because real return comes over the long term. Second is conviction, which only comes from genuine understanding of the business. No company performs well all the time. There will be ups and downs. And third is tracking the performance. You can't just buy and forget. If a company keeps underperforming or management overpromises and underdeliver, you have to review your decision and sometime exit. That's why I closely track the quarterly results of more than 200 companies in my weekly video series, which is an exclusive community of long-term investors available on my website or via the join button of this channel. With this, let's start with today's video. So there are multiple factors that resulted in weak performance in 2025. One of the biggest factors is company is going through a big transition phase where it is investing significantly in scaling up Praj GenX facility. So Praj GenX is a wholly owned subsidiary of Praj Industry established in March 2023 to focus on emerging sector of energy transition and climate action. It mainly includes development of modular and scalable systems for producing SAF, that is sustainable aviation fuel, which is a low carbon alternative to conventional aviation fuel. Then building solutions for green hydrogen production, which uses renewable energy to produce hydrogen as a clean fuel. Then production of bio-based material, that is biopolymer, to reduce plastic waste and carbon emission. Company has made a substantial investment of more than 100 crore in this GenX facility, which is situated in Mangalore. In FY25, this investment impacted Praj net profit by nearly 80 crore. You can also see this on screener, where if you look at consolidated data, there's a sharp fall of 6.8% and 22% in company's revenue and net profit in FY25. But if you look at standalone business of Praj, ignoring subsidiaries like GenX, the fall is much lesser. It's almost a flattish performance. Please note that Praj GenX Mangalore facility was made operational in FY25 to undergo audits and receive approval from international customer. And 8 key customers have audited and approved the facility in 2025. And 3 have signed long-term agreement for supply. With the necessary client approval now secured, GenX is geared up to contribute to company's revenue and profit from FY26 onward. Although meaningful revenue contribution from GenX facility is expected to start from Q3 of FY26 onward. I hope now you understand one of the key reasons behind weak performance in FY25. And it is due to heavy investment as Praj is going through a transition phase. Apart from this, Praj also faced challenges in its core business due to slower project execution. The global bioeconomy and energy transition sectors where Praj operate are influenced by macroeconomic factors such as geopolitical tension, inflation, and energy market volatility. These factors have delayed international project timelines. that further impacted the performance of Praj. Please note that Praj business is project driven, with revenue and profitability often fluctuate based on timing of order execution and project completion. FY25 weak performance partly reflect the cyclical nature of the industry, where certain quarters see lower activity. Having said this, management has guided that they are sitting on an order book of around 4,200 crore. Out of this, they expect to execute around 75% order in FY26. Overall, the guidance is to grow revenue by around 10% in FY26 and margins will be back to double digit. This is primarily because the orders expected to be executed in the next year are majorly on the international side, which are considered more accretive for margins. And as far as long-term vision is concerned, management has given an ambitious target of achieving 10,000 crore revenue by 2030, which is 3x of its current revenue. This strategic vision is anchored in several key growth drivers and initiatives. Let's have a look. So first key growth driver is expansion into energy transition and climate action. As discussed earlier, Praj is diversifying beyond traditional biofuel, including blue and green hydrogen, green ammonia, and waste to energy solutions. These areas are expected to see significant global investment. This facility of projects in Bangalore is designed to deliver modular process plants and is projected to contribute around 2,000 to 2,500 crore in annual revenue at full capacity. Then second driver is scaling sustainable aviation fuel production. India has set SAF blending target of 1% by 2027 and 2% by 2028, while Europe and US have even higher target. So Praj has already demonstrated its capability by facilitating India's first commercial passenger flight powered by indigenously produced SAF from sugarcane molasses. Third driver is diversifying into biopolymer and renewable chemical. Through its BioPrism platform, Praj is venturing into production of biopolymer and renewable chemical, offering a sustainable alternative to petrochemical. Fourth driver is increasing export revenue share. Currently, export account for around 29% of Praj revenue, and company aims to increase this to 50% by 2030, leveraging opportunities in markets like US and Brazil. Of course, it's too early to really conclude anything, but one thing is clear. Praj is very promising company in biofuel sector. Over the last 5 to 6 years, company has actively transformed itself from being just a first generation ethanol player to now becoming a bioeconomy innovation company. And this evolution did not happen by chance. This was backed by serious R&D, global partnerships and a bold vision. Back in FY19, nearly 75% of Praj revenue came from its core bioenergy business, mostly traditional ethanol plant. Today, while ethanol still contributes the largest chunk, which is around 68 to 70%, but we have started seeing a gradual rise in revenue from their high purity system business, then their engineering equipment division, and even from early stage commercialization of their R&D work under projects. So essentially, they are building a multi-engine growth model where core ethanol provides steady cash flow and the next wave of growth could come from these new gen IP driven technologies. And if they get this right, Praj won't just be a vendor in India's ethanol journey. It could become a global decarbonization tech exporter in years ahead. But what are the key risks in this growth thesis? Let's have a look. While Praj's 10,000 crore vision is exciting, there are a few important risks investors should keep in mind. First, a lot depends on global clean energy adoption, including regulatory clarity on sustainable aviation fuel, hydrogen and biopolymer. If these sectors don't scale up as expected, or if policy support is delayed, revenue contribution from projects could be slower than anticipated. Then second risk is project delays, especially in international market. They have already hurt FY25 performance. Since Praj business is order driven, any delay in execution or customer side challenges can create volatility. Then third risk is competition risk. Global players in green fuel, carbon capture and hydrogen tech are investing heavily. Praj will need to continually innovate to stay ahead and win large international contracts. Lastly, the 10,000 crore revenue target by FY30 implies an aggressive growth rate. That will require excellent execution and any misstep, especially in managing large-scale international orders or new technology, could impact margins and investor sentiment. Now let us conclude what you should do as an investor in the company. Well, let's be honest, FY25 was quite weak for the company. Margins were under pressure, order inflow was sluggish, and stock has corrected sharply. For short-term investors or those looking for near-term trigger, this might be frustrating. But here is the thing. Praj is no longer just a biofuel company. It's evolving into a clean energy tech player with exposure to hydrogen, sustainable aviation fuel, biopolymers, and carbon capture. The new GenX facility and the strong push into export market shows that they are preparing for a much larger game. The management's 10,000 crore revenue vision by FY30 may sound ambitious, but if they execute even 70-80% of it, the upside could be meaningful. And that's likely why institutions are still holding or even increasing their stake in the company. So if you're someone who believes in the long-term energy transition story and you are okay with near-term volatility, Praj might deserve a place in your portfolio. But remember, the journey won't be linear. Keep tracking order book visibility, export momentum, and execution at projects. That will separate narrative from reality. Thank you for watching this video. I'll see you next video. Till then, take care.